This is Alan Bush with the Daily Financial Forecast for Thursday, July 28th. Stock index futures a little bit lower in the overnight trade, but now advancing on ideas that yesterday's statement from the Fed is basically accommodative, does not indicate any near-term rate increase from the FOMC. So we have to believe that the outlook is unchanged. Continue to believe that stock indices will continue to advance probably for the rest of this year. Moving over to the currencies, seeing the dollar index just a little bit lower. Much of this pressure linked to ideas that before the Fed statement yesterday that the Fed could possibly be a little bit hawkish, which was not the case. They were only neutral in their statement, so that putting a little pressure on the greenback this morning. Longer term, though, I think the dollar index will probably advance since the Fed is still the only major central bank that is on track to raise interest rates either late this year or early next year. Also seeing a little strength in the euro currency, this after inflation in Germany coming in up more than expected, up 0.4%. The guess was up 0.3%. And this is basically an ongoing theme in countries, basically G7 countries. We are seeing a tendency for inflation levels to come in a bit on the higher than expected side. So inflation is coming back, which we'll get into a little bit later when we talk about precious metals. Also, we are seeing some pressure in the British pound. This on the widespread belief that the Bank of England at their upcoming meeting on August 4th will be lowering interest rates by 25 basis points to 25 basis points, and that would be a new record low. And in the interest rate futures markets, the Fed statement initially was supportive as the Treasuries started to firm up a little bit. A little pressure more recently today as supply an issue with the Treasury selling $28 billion in 7-year notes today. Also, the probability of a rate increase at the December meeting falling a little bit down to 48%. That compares to 53% yesterday. So that's for the December meeting, and also for the subsequent meetings, probabilities of rate increases from the Fed have also continued to drop a little bit. Now, moving over to the gold and silver, good gains yesterday, some follow-through strength today. As we mentioned earlier, inflation is becoming, I believe, more and more of an issue, although it is only gradually accelerating. I think in the months and years to come, inflation will become a substantial problem. Not right away, it's going to be very slow, but the way to position yourself in an inflationary environment is to buy every break in both gold and silver. We are in the very early stages of a long-term bull market for the precious metals. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.